Hey guys, thank you for watching. For this video, I wanted to make an update to my Robinhood strategy video. Even though I only posted that video a few weeks ago, it's actually been 5 months since I made it. And I figured it was time for me to put up an update, especially because it looks like that's one of the videos that you guys enjoyed. Now, before I get started, I wanted to remind you guys that I'm not a professional by any stretch of the imagination. Everything on this video is just my experience with Robinhood and investing in general. So please take everything with a grain of salt. Please do your own research when it comes to investing. It is a risky thing to get into, so if you're going to start investing your own money, make sure that you understand all the risks involved. So with that being said, let's get started. Today is February 21st, 2019, and the first video that I uploaded was from late September of 2018. As I mentioned, it's been 5 months. Now, I wanted to make this video earlier, but as I'm about to show you, from October to December, it was a pretty scary time, so I didn't want to make the video and then scare everybody away from investing, because during those 3 months, it was basically just the market adjusting itself. It had been almost 10 years since the last time the market had a drop. So I didn't want to use the end of those 3 months as an example of the market, because as I said, it was an unusual activity. As you can see, my portfolio right now stands at $27,118, which actually includes about $6,000 that I put into my account when the markets were crashing. But I'll explain that in a little bit because it can get kind of confusing. So first, let me show you guys the history. You can see that in the first couple of years, I was doing pretty good. It was moving up, and then in late September is when I made that video, and I was up somewhere around 55%. It shows 42 right here, but it was actually closer to 55%. And so what I did following that video is I started selling some of my bad stocks, and then I started buying some more stocks after I increased my margin account. And next thing you know, blap, everything just dropped. So for this massive drop right here, which was, if I'm being completely honest, was really scary, especially because it lasted 3 months and I didn't know when it was gonna end. But as I said in my first video, when I invest money, I consider that money lost. So even if I did get to zero, then, I mean, it would have sucked, but I assume it's part of the game. But eventually the bleeding did stop somewhere around mid-December, right before Christmas. The market started recovering. So as you can see right now, as it stands today, I'm up 2,500 overall, where at the end of September, I was up over 10,000. And at the worst point, right around mid-December, I was down 6,500, somewhere around there. So as you can imagine, when you go from plus 10,000 to minus 6,500, you start reconsidering. I was trying not to react during this point, and for the most part I was ignoring all the activity, but it came to a point where I had to pay attention because I have a margin account. And full transparency, this is something that I still don't understand with Robinhood, but if I take you guys to my account and the account summary, right here I'll show you that my total market value is over 42,000. But I'm using 15,000 Robinhood Gold money. So what that means is that I'm borrowing 15,000 from Robinhood to invest it. And for that, I'm paying $50 a month. Down here at the bottom, you'll see the buying power. I have 8,898. Now, before the market started crashing, I actually only had about 400 of buying power. And it was basically there just to be able to pay for the Robinhood Gold. But then all of a sudden, the market started dropping and the buying power started going into the negative. Again, I don't know how Robinhood figures that out, but next thing you know, I was negative 1,000, negative 2,000, and it got to a point where in order to maintain my margin account, I had to either sell stock or add money. Now, before I get too far ahead, let me explain what the margin account actually does. The way I understand it is you're allowed to have a margin account that's no more than 50% of your portfolio. So for example, if you have $10,000 in your portfolio, the most amount of money that you're allowed to borrow is 10,000. If for some reason you have 10,000, you borrow 10,000, that's 20,000. If your portfolio drops to, let's say, 18,000, then that means that you're under your margin account. So now, if you're 18,000, that means you should only be borrowing 9,000, because that's half of 18,000. And so you're actually below your margin. So you'll get a margin call. That means that the broker is going to call you. I don't know if that's a literal call or it's just like a term that they use, but you're going to have to add more money to meet the difference or you're gonna have to sell stock. So if you're at 18,000 and you're borrowing 10,000, that means you need to add $2,000 in cash or sell $1,000 of the 10,000 you're borrowing so that you're back at 50%. So anyways, it's a little complicated. Like I said, honestly, I don't really understand it 100%, but I do know that the two options you have are either to sell stock or to add money. So while the market was dropping, it got to a point where I needed to either add money or sell stock. So initially I kept adding, I added 1,000 and then another 1,000 and another 1,000. And at the end, I think 6,000 when I basically ran out of savings and I couldn't add any more. But the market kept dropping, so I had to cover my margin call. I was forced to sell some stocks. Well, I didn't want to sell my good stock like Netflix, because once the market recovered, I'm assuming that would be the stock that recovers the fastest or first. But I also didn't want to sell the stock that was completely red and at like 60-70%, because that would guarantee those losses. So if I'm about $1,000 worth of stock and it's down 70%, that's $700 that I'm about to lose. It goes from a paper loss to an actual loss. So the only action that I was comfortable with was selling the stock that I was at zero with, or near zero. So that's what I started selling first. So that way I didn't give up too much of a loss and it wasn't my best stock. Anyways, that's how I did it. I don't know if that's the right way to do it. I don't know if that's the best way to do it, but that's what I chose to do. All right, so once mid-December came along and the market started recovering, then my buying power started going up again. And so that's why when I show you my buying power now, it's at 8,800. The 6,000 that I added while the market was dropping, and then in addition to those stocks that I had to sell. During that drop, I actually sold perfectly right before the market started crashing. But the biggest problem was that I bought somewhere around $14,000 worth of new stocks using the Robinhood Gold. And so all those new stocks that I bought and were basically at 0% right when the market started crashing ended up being the stocks that were at 60-70% right at the bottom. So you can see right here that I still have some that are recovering, some that aren't recovering. There are some other stocks that are at 175%, 184%. Those were way down. So if I show you this Chegg, if I show you the last year, you'll see that in October it started dropping like everything else. But then once, late October, it started recovering, and it actually recovered faster than all the other ones. So now it's above the price where it started dropping back in early October. Another thing about a Robinhood that I'm not sure what's going on is these three stocks at the bottom, this at 0%. Now I actually bought shares, and for some reason the average cost got dropped to 0, which is inaccurate. I'm not sure why it does that. I'm gonna need to contact Robinhood and find out what's going on right here, because it doesn't show me the average cost. I can't tell if I'm winning or losing on this one. And then also, if I wanted to arrange all of these by biggest loss and biggest gains, I would have to do it individually. I would have to, go one by one and like hold it and move it up, and then hold it and move it up, and that takes forever. So another app that I use is investing.com. Anytime that I buy stock on Robinhood, I add it to my portfolio in this app. And so what that allows me to do is, in a quick glance, I'll go to my portfolio, and then I can basically look at the daily action. So everything that was red, everything that was green, and then I can do the open. So right now, as you can see on the top, my portfolio is $41,838. I dropped $16.22 today. I am up overall $2,424. What I can do is I can hit this icon on the top left and the left of the plus sign, and then I can arrange from low to high. And so what that's gonna do is gonna arrange everything overall for the day on the biggest losers and the biggest winners. So you can see that the biggest loser was negative $38.40 and is the Superior Drilling Product Inc. And then another thing that I like too is that you can actually see the symbol and the name of the company. So it's not just the symbol like in Robinhood. So hopefully Robinhood can pick up on this right here and have it so that you can arrange it, organize it in any way you want. So the biggest winner today was $17.60 for the Transenterix Inc. Now that's for the day. If I do overall for my whole portfolio, you can see that the biggest loser right now is that same one, Superior Drilling Products Inc. That's a negative 60%. So in about 6 months, if that's still there, I'm most likely gonna end up selling that one. And the biggest winner right now is this NVCR, which is at 184%. And then Chegg, which is the one that I just showed you, is at 174.96% up. So $1,700 above what I bought. So if I bought $1,000 worth, I'm at, right now it should be worth $2,707. So that's a gain from the original price that I bought it at. All right, so now let me look for the stock that shows zero on Robinhood. So that's MCFT. So I'm actually up 16% on that. Okay, what's the other one? Let me go back. NMRK. So NMRK. Okay, it's not even on here. So let me see what is going on with this one. NMRK. It says I got 37 shares, which is the Newmark Group. Okay, so that one's not on there. I'm not sure what that is. And then costs, KOS. So cost KOS, so that's negative 41. So I'm not sure what's going on with this one right here with the NMRK. Let's see if we sold it during that period. I'm gonna go to history, and then I'm gonna do orders. All right, so I'm not sure what's going on with this one, but I can't find it on any of the history where I either bought it or sold it, but it says that I have 37 shares. So again, you know, that's just one of those things where Robinhood really needs to fix and figure out what's going on. All right, so we'll figure that one out later. Another thing that I wanted to show you is if you look at this Axon Gen, which is at 1801, it shows you right here I have 65 shares. I bought it for $16.35, which means I'm up 10%. But if I show you when I bought it back in July 2017, if I look at the 5-year, so you can see that this is one of those that I bought because it was in an uptrend. So I bought it right around there, and it went all the way up to $54. Hindsight's 2020, so that tells me I should have sold it right there, but I didn't, and I just kept holding on to it because it was still green, and now it's back down here. Now I don't want to react to it because technically I'm still up, and it looks like it's settling down, so it might go back up or it might keep going. I'm not too sure, but I'm just gonna leave it. Now I'm not holding on to it because I think it's gonna get better. I'm holding on to it because I don't want to sell it because of an emotional response. So if I sell this one because it started dropping, then that means I'm gonna sell all of them because it started dropping. I think I understand the basics of investment, and the biggest takeaway that I get from it is don't be emotional about these. And so that's what I'm trying not to do. Obviously, I would have preferred to sell here, but I can only tell you that now is hindsight. There's no way I could have known that it was going to drop that much and not go back up. So just to give you a quick example of why I don't want to react to that too much is because if I show you Netflix, I bought this one a couple of times. The first time that I bought it was at $155. And then I sold it at 183, and I had to buy them again at 189. And there was a point where it hit over 400 bucks. So if I would have kept it at 155, then I would have been golden, right? But again, you can't predict everything. All right, guys, so that's my strategy update. I don't know if you got something from it or not, but I just wanted to show you how the strategy that I'm using is working for me. I do get worried sometimes when I see like the negative 60, the negative 57%, but because I decided that I was gonna hold it for a year and at the end of the year make the decision, then the least I can do is kind of stick to that plan. If the next time I sell stock and I don't feel like the strategy is working for me, then obviously I can readjust and find another way. But I'm just sharing this with you guys so that you can see if it's not the right strategy and you know, I end up losing all my money, then you get to learn from my mistake. The way that I see it, the strategy is working out for me just fine right now. During those 3 months, it seems like everybody got hit, not just me. And so I don't know if that was a strategy fail or something that I did or I could have prevented it. All right, guys, so I don't want to make this video too long. So thank you for watching. Please subscribe to this channel. Hit the like button if you like this video. Turn on notifications so you know when I upload another video. And I'll see you guys on the next one. Bye.